Hello and welcome to the Week in Markets. My name is Paul Durrans and I'm delighted to be joined by Faye Graham, one of our investment analysts. Now, it's been a relatively quieter week for markets in terms of global economic data compared to last week, and we've had less corporate earnings come through from the larger US companies as well. So it's actually brought the UK into focus, where we've had the Bank of England meeting on Thursday and a series of important economic data come through. I suppose, Faye, before we go and look at the UK, if we just think about how equity markets have been performing this week, both in equities but also in fixed income markets, how have they been performing?
Yeah, so it's actually been a really strong week for global equity markets. We've seen positive returns across all the major equity markets, led by actually the UK and Europe, just given some of the strong data that we've seen from those regions, which we can dig into a bit. Also strong month for fixed income as well. So we've seen yields move lower in the US and UK, which has been positive for the returns.
And it is a standout for the UK if you think about the FTSE 100, all-time high. And you're right to focus on both equities and bonds. We're global investors, we're multi-asset investors. So yeah, a very encouraging week from an investment perspective. So if we think about the Bank of England, a lot of focus on that this week. On Thursday, there's always focus on where perhaps interest rates may be going. What's the Bank of England's expectations around economic growth, inflation? I suppose for context, coming into this year, interest rate cuts priced 1.5% price in terms of cuts from the 5.25% current interest rate. But that's been revised away as inflation's becoming stronger. US Treasury yields have pushed higher, which has dragged global yields higher. So we've seen a bit of volatility in the interest rate market. I suppose we had the decision on Thursday. What did we learn?
Yeah, so Bank of England coming into the meeting expected to hold rates unchanged. And that's exactly what they did. So rates still at 5.25%. What's interesting actually though is if we look at how the members actually voted, we saw a bit of a change there. So previously we saw 8 of 9 members vote to hold rates unchanged, only 1 member voting to cut. This time we've actually seen 2 members vote to cut rates. So a slight nod in the direction of seeing those interest rate cuts come through.
So it appears that we might be getting a bit closer now to an interest rate cut. And if you think about the Governor of the Bank of England, Andrew Bailey, he did say that it was expecting cuts in the coming quarters as long as the inflation and growth data comes in line with expected. So encouraging. I suppose on the inflation front and on the growth front, we had revised projections and comments around that. What were there?
Yeah, so inflation, they've actually revised their forecast down lower. And then on the growth front, they've actually revised their forecast up. So inflation, still expecting inflation to get down to target this quarter, expecting slight reacceleration into the back end of the year, but then expecting that to actually trend down lower again following that and fall below target in about 2026. And then in terms of growth, they also revised their growth expectations higher, so positive on the whole really. Lower inflation, stronger growth.
Exactly, and I think that's part of the reason why the UK equity market has continued to push higher, with inflation getting to that important 2% target in the coming months, drifting a little bit higher, but on the whole, a very positive growth inflation backdrop, especially compared to where we started the year, which was quite gloomy outlook for the UK. I suppose we have had economic data this morning, GDP data, so that's a measure of economic growth, and stronger than expected.
Yeah, so really strong start to the year actually, so came in at 0.6% growth for the quarter, which was above expectations. Yeah. Actually the strongest growth that we've seen in the UK in over 2 years now. You might remember the back end of last year, the UK actually went into technical recession, but we've now, the strong growth numbers this quarter, we've seen that actually coming to an end. So really positive start to the year.
And and that strength is really coming through manufacturing, services?
Yeah. So you've seen strong growth in both services and manufacturing, so broad-based across the services sector. Manufacturing strong, slightly weaker within household consumption, still positive, but growth is really mainly driven by the services sector and manufacturing sectors.
And it'd be interesting to see how the household consumption evolves from here, because we've got inflation coming down, wages are still elevated, so that should support consumption, particularly if interest rates start to come down in the next couple of quarters as well. I suppose one of our themes here at True Potential is looking for economic breadth outside of the US economy. So the US economy has been the most robust over the last couple of years, and we've been playing into that, but now we're looking to see if the growth environment transitions outside of the US and see stronger growth impulse from the likes of Europe and emerging markets, and we're seeing that clearly here in the UK. I suppose we've had data over the week from Europe which is supporting that, would you say?
Yeah, exactly. Definitely seeing some signs of improvement in the European data. So we had services sector data out this week that pointed to strength in the services sector, seeing expansion there, the third consecutive month of expansion after sort of having contracted for the past several months. So really positive signs there. Also had stronger retail sales. And then last week we also had stronger than expected GDP in all of the four major economic regions within Europe. So really strong on the whole.
And I suppose just before we conclude is that if you think about interest rates and other central bank meetings outside of the Bank of England, we've had a couple of those as well, which we've seen some positive developments.
Yeah, so we've actually seen both Brazil and also the Bank of Sweden cut interest rates this week. So Brazil, they started cutting rates about August last year. Sweden, actually their first interest rate cut this cycle. Yeah. So that should give the Bank of England a bit of comfort to cut as well.
Excellent. I think, just to summarise, the UK is catching up to our global optimism theme, which is where equities can really be supported by the stronger growth economy, and there's greater scope for central banks now clearly within Europe and emerging markets to start lowering interest rates, which can help really fuel the returns from multi-asset portfolios. So thank you, Faye, and thank you very much for watching. We'll see you next week.